How's it going, everybody? Happy Wednesday and welcome to the Hot Corner Insider Strategy session. We do this every week, 1 o'clock here on Wednesdays, where we go over a little bit of macro, and then we dive in to any new and exciting insider transactions, and then our favorite setups from our universe of insider stocks. So, get the disclaimer out of the way. Nothing we discuss here today constitutes any solicitation to buy or sell securities. This is solely for informational purposes and not to be construed as investment advice. All right. So I'm on a time constraint here. We got another, boy, our daily programming schedule is really filling up here. They're coming on doing another video at 1:30. So Sean and JC. I figured I would keep the macro or overview section pretty light for that reason. So I was thinking to myself, what is one chart? Like, if I had to pick one chart to go over before we dive into the individual stocks, what would it be? It's this. I guess I cheated. I stuffed 2 in 1. We have the Spider Technology Large Cap Fund, XLK, and then Spider Industrials, XLI. So we're looking at large cap tech and large cap industrials. Now, one is a very growth oriented sector, and the other is really value, right? Cyclicals, value, industrials. So it doesn't matter all of this talk about rotation and or the sector rotation and relative strength from one group or another really doesn't matter if on an absolute basis prices aren't trending higher. Right? There's no money to be made, even if the relative trend is moving higher for something, if the absolute trend is not also moving higher. So when I look at tech, I look at industrials, each, a great representation, one of growth stocks, another one of value and cyclical stocks. Both of them look awfully similar, look to have, resolved these ranges or, consolidations higher earlier this summer, have since failed, rolled over back below these critical resistance levels. Both indexes. So that remains the biggest theme right now. Overhead supply is everywhere. Last week, we talked about how it's not just in the US, right? From a diversity of indexes, sectors, individual stocks, right? A lot of overhead supply in the US, but also overseas. All right, we'll do one more. Last week, we talked about this chart. I didn't even change it. This is the chart from last week. US 10-year yields were breaking out to their highest level since 2008. Huge level there. Call it, 4.4 in the 10-year. We'll talk about why it's really, a range more than just 4.4. It's more like 4 to 4.4. Now this chart looks like this. And JC, I got to give it to him. He made a great point today on the morning show. I feel like we've been talking about bonds so much on the morning show lately, and we have, and that's because we're finally getting some action. It looked like these ranges were resolving higher, not just with, US yields, but overseas. I know I keep talking about developed European yields, but they've been such great intermarket information for us this whole cycle. We are paying a lot of attention to them, and we are weighing them a lot. It looked like everybody, Germany, France, Spain, US, we were all resolving these ranges higher. Today, there's some downward pressure, and these charts look to be falling back into their former ranges, a lot of them. So let's monitor this. Let's wait and see. I think the fact that it did not get overbought, like JC made the point this morning, is a big tell, right? When we look at patterns like this is a continuation pattern, nice little sideways consolidation in the context of a larger uptrend, right? If you were to zoom out on the 10-year yield, go back to the COVID lows 2020, we've gone from 50 basis points to 4 and change, right? So massive uptrend. This is just another continuation pattern within the context of that uptrend. If we view it that way, we would anticipate an upside resolution, which it looked like we got. And if and when we got it, we would look to something like momentum, in this case, the daily RSI 14, for confirmation, to confirm that breakout. We never got that overbought reading that we would want to see to confirm new highs or to confirm a breakout, right? So now it looks like rates rolling back into their prior range, not getting overbought. We'll see. Maybe this breakout takes more time. If you zoom out, though, like I said, it's not 4.3 or 4.4. It's really above 4%. This is such a monster level. If you really, really zoom out to like the 1980s on any of these yield charts, you can draw giant downtrend lines. You see them break, just a few years back. And you would think, a multi-decade trend reversal is underway. If that, trend line violation is valid, why not anticipate an upside resolution? And I think this 4% line here, you have the highs from just after the great financial crisis, 2010, 2011. I think that 4% level is really, really important, right? So maybe yields need more time, but if they are to eventually break out, again, I think of these charts and this overhead resistance, it's gonna be hard, especially for tech stocks, to keep trending higher. If the 10-year yield's breaking out of this range above 4.3, 4%, we go to 5, 6s, it's going to put pressure on long duration equities, right? Just like this chart here. In an environment where yields are theoretically going to where I'm saying, a lot higher from here, bonds in the blue here are absolutely, collapsing, making new lows. And this divergence between growth stocks and the bond market would only be growing if stocks were to hold their current levels. So we'll see. We shall see. So today was fun. I went through the whole list. Just looked at almost 1,000 charts here this morning. Scanned for relative strength. So focused on the best ones. Got some new names today. So we'll keep it pretty brief, but we do have a handful of new setups. Really excited about one of them in particular. Saved it for last, but a couple healthcare names here at top. This is a biotech, IDEA Biosciences, IDYA, making new all-time highs on both absolute and relative terms. We love to see that in the stocks that we're buying. If we're above this 28 level, got to be long, target of 40. IDYA. Also, just love seeing the relative trend confirm the absolute trend and get these breakouts and these new highs pretty much at the same exact time. Option Care Health, OPCH. This one just came on our list. We had purchases like a week or two ago. Two executives. Yep. August 15th, we got the filings. Director and the corporate secretary together purchased almost $2 million worth of shares. And look at them. They're buying strength. They must be good technicians. I know they're watching this base breakout like we are. 35 is a big level. You have a shelf of former highs around this 35 level, 2014, 15. A little base on base, right? We're still climbing up the right-hand side of this base. Play it back to those old highs, $70. We're above 35 in Option Care Health. That's OPCH. Like it long, target of 70. We've been talking a lot about coal stocks and uranium stocks. But it's really whole energy sector. And I know those groups are materials, but they're really energy. If energy is going to enjoy another up leg, I really like those ancillary plays like coal and uranium. I think that's where the juice will be. They've both been showing really impressive relative strength over the ultra short term. Both are in very strong, structural uptrends coming off the COVID lows. But more broadly, if we think crude oil is going to dig in here, we think energy, XLE is going to dig in here, we got to be looking at more of these oil and gas names. This one really stood out. This is Civitas Resources. It's an integrated oil and gas company. We're above 85. I mean, look, we got this nice base breakout a few years back and pretty much sideways, consolidating, digesting those gains. $85, you could even, if you want to use the pivot highs and jump it, maybe 75. Get in it now. I like 85. Think you could be patient with it. Strong primary uptrend here. Also look at the relative trend, right? Nice base, a little bit of digestion, consolidation, ready for a new leg higher. So 85 for me, target of 125. This is Insight Enterprises. Nice mix of names too today. This one is not new, but it's kind of new. It's been a long time since we talked about it. I figured, why not? Let's outline some new levels here. I was scanning for relative strength and leadership, like I said. This one, still right there at the top. It's really been at the top in terms of leadership most of the time that we've been doing the scan. And that's illustrated here in the lower pane, the relative strength line. Just consolidating, breaking out, rallying, consolidating, breaking out, rallying higher. You see it over and over again throughout the years. I think we do that again here. We have a clear level around 147. If you want to use the pivot highs, I think they're in the low 150s. Either works. It's really that range here. So if we get that breakout, so say 150 with a target of 220, we like Insight. Still like Insight. This is the one I'm excited about. It came up actually in Chart Request Live, I think a week or two ago. Patrick and I were doing it, and I put it on my list, and I've been watching. I was like, oh boy, I really like this name. Love the price structure. Also really like what it does. It's a uranium stock. It's a mid cap, but it's not operating its own nuclear plants, right? We all know how risky that is. Huge risk for these uranium companies, of course. The space was dead for over a decade because of the disasters that have happened at these nuclear plants over the years. What BWX Technologies does, BWXT shown here, they're kind of like a picks and axes play, nuts and bolts play. They sell the nuclear components. I'm sure they have like a big services business too, to the government, but also private nuclear plants. So I think a really good way to bet on some new secular bull market for nuclear or for uranium would be this BWX Technologies. It looks better than any of the stocks in the space right now. Pays a dividend, breaking out of this, multi-year consolidation here. Really clear level. I like 72 with a target of 94. But it's funny because it came up on Chart Request Live. We were stalking it. Then just 2 days ago now, popped up here. Here's our hot list from August 21st. Just Monday. So Robert Nardelli, he's a director. He bought 140,000. But what I love is he's out here as an insider buying strength. It's easy for these executives to come out and buy a stock that as it's collapsing, try to put a vote of confidence, in the name. See that all the time. What's far more rare is to see somebody come out and buy a pattern breakout or buy, new all-time highs in their stock on the open market. So I love that. Above 72, long BWX Technologies, target of 94 and change. Also, just an honorable mention here. We had some good setups last week too. Lennar. So Lennar Corporation on our list again. Amy Bance, director, out here just, building a position in Lennar. We saw this is now 2 weeks in a row. Form 4s filed by the same director. We're above those former highs, 117. Look, the market's been weak. Lennar, you got to pull back to a very clear level. This could just be a textbook retest of this base breakout. Look at momentum, not getting oversold again. Hasn't been oversold since last summer, more than a year now. Look, I'm not afraid to lose $1, right? You could have a tight stop here below those old highs. Maybe this is a great entry. So long 117, laid off of there. Keep it tight. You don't want it if it's back in the box. But if we're above 117, I like this. Home builders are still some of the strongest stocks. This is a pretty standard pullback. Not really any real damage at all. So if we're above 117, we like Lennar long with a target just above 150. Let me check out the chat here because we are done. Boy, under 20 minutes. I'm out here breaking records. I don't know if we've ever been that short. Hi, big fan from India. Please check chart. WIT. Reading from the chat. Nakunj, I hope I got your name right. That's for Chart Request Live. Join us tomorrow. Chart Request Live, I think we do it at 1:30. Hope that's right. join us for Chart Request Live. You could email us now, info@allstarcharts.com. I'm sorry, info@stockmarketmedia.com. And we'll cover the chart then. WIT. Yeah. MTTR. Guys, that's for Chart Request Live. So thanks everybody for joining. This was fun. We'll be right back here, same time, same place next week.